Hi everyone, my name is Itai and I'm a private mortgage consultant. I have a company called Mishpacha Finansit, and what we do is we are helping people getting mortgages from the banks. We are here tonight to talk about mortgages in Israel. What is a mortgage loan? What's the basic regulation in the Israeli market? And what we should and shouldn't do when we want to take a mortgage. We have to remember that a mortgage is a product. You buy the product from the bank sells money and you buy the money, and since it's a product, the price is negotiable, and in case of mortgages, any client pays a different price. We'll see a bit later on. Before we start, we need to remember that the mortgage monthly payment is the biggest expense of any household which has a mortgage. Usually we are talking about roughly 30% of the household income, which is quite a lot if you think about it, and we should take it under consideration when we plan a mortgage for a very long time, sometimes up to 30 years. We have to remember that as well. So let's start. What is a mortgage loan? Basically, a mortgage loan is any loan taken against a property. It doesn't have to be for housing. We see later on that it's got many different uses for mortgages in Israel, but any mortgage or any loan that we take from the bank and we put a property against it, it's called a mortgage loan. A mortgage is a secured loan. First we have the properties we just talked about, and then we have to insure the loan. We are insuring the loaners with life insurances, and we are insuring the property itself in case of something happened to the property. Usually we use mortgages for housing, but not just. We see the different uses up ahead. And it's the longest and the least expensive loan that we can get from any bank. The pros, those are quite simple. First of all, it's the longest one. In Israel, it's up to 30 years or up to the age of 75. When we say up to the age of 75, we mean we have to pay off the loan until the age of 75. In some cases, the banks will allow us to go up to 80. It's the cheapest loan because it's a secured loan, we just talked about it. And for most people, it creates the option to own a house. The cons, those are much bigger problem that we have to take under consideration. We don't have to be scared, but we have to understand it, okay? First of all, we are taking upon ourselves a long-term debt. The cost is very high. Although it's the cheapest loan you can get, still if you take a loan for 30 years, then the payments will be very high, and the total cost as well. The monthly payment usually increases because usually the bank attach the money to any financial mechanism to protect the money value. So through the years, we see that the monthly payment is rising, and it's something that we have to understand now and plan it up ahead. And the property is subjected to the bank as a collateral. So we cannot sell the property unless we clear the loan with the bank. In addition, we have an accompanying cost, which are quite expensive. We need to have a lawyer for the deal. We have to pay to the bank for opening mortgage files and etc. Appraiser, quite a lot of money that goes around a mortgage loan. The basic regulation in the Israeli market, I guess that any market have different rules. In Israel, all commercial banks works under the guidance of the Israeli bank. And those are the basic regulation of how much money we can get from the bank and all the other terms. Basically, for our first property, or if it's our only one, if we had one in the past and we sold it, we can get up to 75% of financing. If we are housing improvers, which means that we are having a house, we are buying a new one, and we will sell the current one, we can get up to 70% financing from the bank. For second property or more, for the luckiest one of us, we can get up to 50% of any additional property that we will buy. For any objective but real estate, we can use the loan for different uses. We'll see in a minute. Then we can get up to 50% of the value of the property we are already having. Okay? And a mortgage loan is up to 30 years or up to the age of 75, as we spoke about it. But there are other solutions in financing companies which are not banks, which are willing to finance, in some cases, up to 40 years. All the additional costs, the purchase tax, the lawyer, the real estate broker, the mortgage consultant, etc., cannot be paid with mortgage money. So when we say up to 75, let's say, for example, up to 75% financing, we have to bear in mind that we need to have some extra cash to pay all the additional costs for the loan. Terms of getting a mortgage. Minimum equity. As we say, if the bank is willing to finance up to 75%, it means that we need to have minimum equity of 25%, and since additional costs are not included, let's say roughly 30% equity. We need to have stable income and reasonable refund ratio, which means that a stable income, the banks wants to see where we work, for how long, and usually they want to see a seniority of at least 1 year. And the refund ratio means that we cannot pay how much we want for the monthly payment, and the bank limits the sum to up to 35% or 40% in some cases of our free income. Free income is not our net income, it's our net income after we deduct any long-term money obligation that we have, if we have. Our age, as we just said, we need to have a property. If we buy one, we can use the property we are buying. If we're taking a loan, a mortgage loan for other reasons, we need to have a property that we can be subjected to the bank. We need to be able to make insurance. So the property insurance is the simple one, but we also need to have life insurance. And for people with let's say medical conditions, that issue needs to be checked before we are signing any contract or taking any money obligation, before we get a clearance from the bank. And last but not least, maybe the most important one is a proper financial conduct. Those of you came from the States, you know it as a credit score. Basically, the Israeli bank are monitoring any financial action that we are having or had in the past, and they want to see that we are fulfilling all of our obligations. So if we had, let's say, any problems in the past, it needs to be checked before we're taking upon ourselves any commitment without the bank clearance to get a mortgage. The price of the money. We talked about it briefly at the beginning, but this is the thing that we have to understand. The bank sells money. That's its product. The supermarket sells you groceries, the bank sells you money. Both the bank and the supermarket has got a mechanism where they are setting the value for the product they are selling. The supermarket sets the price, let's say, for the milk, and the bank sets the price for the money. The biggest difference is everyone gets into the supermarket will pay the same price for the milk. But anyone will get to the bank will pay a different price for the money being sold in the bank. And now we try to understand how the bank is pricing this money. First of all, the borrower profile and credit history. The bank sends you money and calculates his risk. He wants to make sure that he will get his money back. And the bigger the risk, the more expensive the money is. So the better your borrower profile and credit history, the cheapest the money will be. The financing percentage. Again, we are going back to the risk. Okay, if we are taking a loan for 30 years, then the money will be more expensive than if we'll take the loan for 20 years. We can understand the reason the bank is calculating this way, because the longer the term, the bigger the risk. The loan objective. Since there are different objectives for mortgage loan, also different prices for this money. So housing, of course, is the basic one, and I think that 90% of mortgages are used for housing. That would be the cheapest one. Then we have, let's say, renovation or helping family or investments in businesses and things like that. The further we go from housing, the more expensive the money will be. The monthly payment. This is quite a big issue, and we have to understand that most of us who are going to the bank, and usually the bank asks us how much money you want to pay every month. And those of us who are responsible usually try to go for a bit lower payment every month to be responsible, because things can happen in life. But you need to remember that the less you pay every month, the more you pay in total. Okay? Because the loan will be longer and the money will cost you a lot more. One other thing we have to understand when the bank prices the money is that the bank also got its own costs. It's not something that we can control, but we need to know the money is also buying his money, and sometimes it's cost him more, sometimes it's cost him less. We have to understand it. And the last one is the loan mix. We can control the price of the money by mixing different loans into one big mortgage loan. We can make the mortgage more riskier, and then the money will be cheaper. We can make the mortgage more safe, or being able to control the increase of the monthly payment in the future, and then from the beginning we'll pay a bit more, but eventually maybe we will pay a bit less. We'll see it now. Different uses of mortgages, we just spoke about it now. I'll show you the full list of it. First of all is housing and real estate investments. This is, I think, understandable. Renovation, sometimes we want to renovate, we need a big sum of money. We can also use mortgages for helping family. Say a family member is getting married, you want to help your kids buying a mortgage. That's a different use for mortgages. For business investments, not in stock markets, because the banks don't like it, but if you want to, let's say, invest in your own business, you need to, to put some cash inside that can be used through a mortgage. Covering debts, let's say you have debts that you took, some private loans or loans from commercial banks or credit card loans, can be covered with a mortgage loan, which is usually cheaper and eases the monthly payment, because we can pay it through a longer period of time. And basically any reason we can explain to the bank and sounds reasonable and responsible, we can get a mortgage loan for. When we are talking about mortgages, we have to understand, in Hebrew we have a saying that says לקחת משכנתה מהבנק, means you take mortgage from the bank, but basically you don't take any mortgage from the bank, you buy mortgage from the bank, because the bank is not giving it for free. And since we are taking or buying money for significant period of time, sometimes up to 30 years, we have to plan it ahead. We don't have to accept the bank terms or the bank goals, but we need to set our own. And when talking about mortgages, planning means saving. The better we'll plan the mortgage ahead, the bigger the saving will be. How we control the cost. So basically, we've got two different ways to control the cost. The first one, I think this one is the basic one and everyone understands it, is the interest rates of any loan that we take into the mortgage loan. The rates are being subjected to our borrower profile and to the loan purposes as we just talked about. And the other way to control the cost of the loan is the loan mix. Okay? We can use stability versus changes. The more stable the loan will be, it will be a bit more expensive at the beginning. The more changes can be made through the years, the loan will be cheaper at the beginning. And our personal fit. It will fit the mortgage to our measures, and if the mortgage will serve us and not us will serve the loan, it will be a bit cheaper. I'll give you an example. Let's say that you are taking a loan now for 30 years, but you know that in 2 or 3 years you've got some saving account which let's say will due in 2 years time. So you can plan a loan that you can cover some of the cost, let's say in 2 years, and make the loan cheaper without paying any fines if you plan it ahead. If you don't plan ahead, let's say, then you can pay a fine and the loan can be a bit more expensive. So a personal fit is something that you have to bear in mind, that it's crucial for a mortgage loan. This is a simple way that the interest and is behaving through the two basic channels. First, we have the fixed rate. What it means is that the rate cannot be changed no matter what. And on the other hand, we have the adjustable rate. Those are mechanisms which says, let's say, that the rate can be changed every month, every year, every 5 year, every 10 year. Okay, and different banks, different mechanism, but it means that the rate can be changed. When we say adjustable rate, we need to remember that the rate is obviously can go up. This is what scares us, but it also can go down. Okay, and for the last I think 3 years, the market was a market of mortgages of rates which went down and down and down, and basically up until now we have the cheapest rates we ever saw in the Israeli market. So from now on, it can just go up, and we already start to see it's happening. Planning a loan. How do you do it? This is the way you save money in a mortgage loan. You have to remember, a mortgage loan doesn't have to be very, very expensive. Okay, you can plan it ahead and make it a bit more cheap. First of all, you have to calculate the credit needed and the credit that you are already using. Okay, because in some cases we are already have some loans or any money obligation. Let's say if we are students and we have to pay tuition, or we have kids in a kindergarten, this is also an obligation we take upon ourselves. If you are paying rent and you want to buy a house instead, this one you don't have to calculate, because when you go into a new house, you won't pay the rent anymore. Our income. How much do I want to pay every month versus how much I can pay? and how much I should pay, because at the end of the day you have to adjust the payment to the total sum of the loan. Usually we calculate it by taking the sum of the total loan. Let's say you took from the bank 1 million shekels and you divide the sum by 200. So for a mortgage of a million shekels, the proper monthly payment will be roughly 5,000 shekels. It can be 4,000, it can be 6,000, but basically this is the ball game that you need to understand. Our plans and goals, let's say we have, we want more kids, and we are planning, let's say, more kids. So we are buying now a 3-bedroom apartment, and we know that in 5 years times we want to sell it and buy a big one or a bigger one. Then we should plan the mortgage for the next 5 years, or 6 or 7 years, or whatever. Okay, we need to try to take under consideration any changes that may happen or we want to create during the upcoming years. Bear in mind that a mortgage can be taken up to 30 years, as we just said, but the average mortgage in the Israeli market lives between 7 to 8 years. Okay, so I know it seems a lot at the beginning, but eventually this is the average lifetime of a mortgage in Israel. We need to take under consideration upcoming money or expenses, because if you know you're going to have more kids in the future, then you have to pay tuition, let's say, to a private kindergarten. You need to take it under consideration. The better you plan, the better mortgage you will have, and it will cost you less money. You don't take a mortgage, as we just said. You plan a mortgage, and then you manage it. A mortgage is not a bank loan that you take for 30 years and you pay for 30 years. You have to check it, let's say, once a year to see if there are any changes that can help you change the cost of the loan, to lower the price, to shorten the years that left. Let's say, for example, that you bought a house and it cost, let's say, 1.5 million shekels, and you took just 1 million shekel from the bank. After 5 or 6 years, the house is already worth, let's say, 2 million shekels. So now your financing percentage is lower. Then you can get maybe a lower interest rate from the bank. Or hopefully your income will increase during the years, and maybe now you can pay 1,000 shekels more every month, and you can, let's say, shorten the period of time left in the mortgage. So you have to manage the mortgage every 1 or 2 years. You can do it by yourself. You can use a private mortgage consultant, but please do it. It saves quite a lot of money. Mortgages that are being managed cost, I don't know, 100,000 or 150,000 shekels less than one you don't manage. Where you can take a mortgage in Israel also. First of all, of course, all the Israeli commercial banks, okay? All of them are selling mortgages. All the insurance companies in Israel are selling mortgages. And some investment companies, mainly companies dealing with P2P, people-to-people investments, are selling mortgages. Both the insurance company and the investment companies are a mortgage solution for people with let's say, a problematic financial history, or that are wishing to get money for something which is out of the basic regulation from the bank. Let's say, for example, I want to buy a second apartment for an investment. So I can get up to 50% of the value of the house I'm buying. Okay, so let's say it costs 1 million shekels. I can get the first 500,000 shekels I can get from the bank, but I cannot subject my own property to take a mortgage within the bank. This is a regulation that forbids the bank from giving us this money, but the insurance company or the investment company will let us take mortgages on existing property. This is the solutions that the market gives you. Mortgages for Olim, basically same regulation. Olims are Israeli citizens, subjected to the same rules and regulation. The only two differences that I know about is, first of all, there is a loan inside the mortgage called Alvat Zakaut. It's not a bank money, it's the government money. You get it through the bank. You don't see the difference, but it's cost you a bit less. And the sum of the money that you can get is being calculated with how much years you served in the army, how many brothers do you have, how much time are you married, how many kids do you have. And for Olim, there is an extra points being given to the total score, which gives you a bigger sum of money, which costs you a bit less. Okay? Any one of you who wants, I can send you a Zakaut calculator, okay, for your phone. So just text me or leave a message on Facebook or Instagram, and I will send you the link. And the last thing, that for Olim, there is a bigger grants when buying a house in preferred peripheral areas. So if you're buying, let's say, in the Galil or in the Negev, there is a sum of money that you can get as Oleh Hadash, between 40 to 60,000 shekels. Okay, it needs to be checked specifically for where you want to buy. There is a list in the Misrad HaShikun website. Mortgages for non-Israelis, okay, people who are not Olim yet or are thinking of buying a property in Israel, which are not Israeli citizens yet. The financing can be up to 50% of any property which is being bought. They have to show an income, a proven income. The banks know to deal with an income overseas. It's not have to be an income in Israel. And you pay a higher purchase tax when you buy a property in Israel. You pay a purchase tax. The first 1.9 million shekels roughly are free for everyone, but non-Israeli people are paying a purchase tax from the first shekel. How do you start the process? And you have to understand that the more ready you will come to the process, the better will be the outcome, the cheaper will be the mortgage. So first of all, calculate your equity and the needed sum from the bank. Okay? Don't let the bank calculate it for you. You have to come ready. Then calculate your monthly payment. How much can you pay from your free income? Usually do the math, roughly through 35% of your free income. You should get something, it's called Ishur Ekroni from the bank. It's a preliminary approval from the bank before signing a contract. This is crucial. You have to understand, if you sign a deal and you won't be able to get the money from the bank, you won't be able to fulfill the deal, then you probably, in 95% contracts that I have seen, there is a penalty inside, which is usually roughly 10% of the deal. Can be quite a lot of money. So before you sign a deal, when you know how money you need to get from the bank, you can address the bank and ask for Ishur Ekroni or preliminary approval for your loan. Most banks, you can do it on their website. You don't need to subject any papers at this stage. You only have to fill in the details, fill in the correct details, please, and then you will get an approval in a day or two, and then you will be more secure of getting the money in the bank. Of course, if you say, let's say, I need 1 million shekel, and eventually you will be needing 1.5 million shekels, then your approval will not stand. Same thing with your income. So put in the correct data. And then you collect all the needed papers. The more organized you come to the bank, you make the banker money a bit easier, the rates you will be getting are lower. This is how it works. So collect all the needed papers, which means ID, pay slips of the last 3 months, bank account print of of the last 3 months, your contract, proof of any other income or money obligation, all the needed papers for the deal. Private mortgage advisor. This is what I do. And why do you have to use them, or why I think you should be using one? Basically, I don't know anyone who will sign a housing deal without using a lawyer. So I see no reason to buy such a big sum of money from the bank without using any professional help. Most of you will say, but the bank is giving us a mortgage advisor for free. The guy sits in the bank, also called a mortgage advisor. You have to understand that his client is the bank, and his goal in life is to sell you the best mortgage for the bank, the one that the bank makes the most money out of it. Okay, so you need to be aware. Private mortgage advisor facilitate the process. We take care of all the paperwork. We know all the regulation. We'll help you plan the mortgage. Eventually, we'll fit a mortgage for you. When you go to the bank says the same mortgage to everyone comes inside these doors. But you saw through this presentation that there are different kinds of houses. If you pay attention, you never saw the same house twice. The same way with mortgages, there are not two mortgages that can fit to different people. So you need to fit the mortgage perfectly for you, be able to live with it for 30 years and to fulfill all your other dreams and goals. We just talked about private mortgage will build you the perfect loan mix that fits just you. And since this is what we do and we know the market rates and how far can we go with the banks, usually we'll get the best rates possible. This is all. I hope you can take something out of it and make your mortgage a bit less expensive. You can follow us on Instagram and Facebook or on website. We've got quite a lot of information. We've got a mortgage dictionary on our Instagram page, which is updating all the time. It's a new page. We just set it up. You can send me an email. You can text me with any question that you have. And maybe we can help you. If you want me to send you the link for the Zakaut calculator, or if you need a mortgage calculator to play with the numbers, just send me a text message and I will send you a link to one. I wish you a cheap and excellent mortgage. Goodbye.